The U.S. budget deficit just jumped to over $100 billion. We have the IMF, which is making comprehensive anchor framework around the processes for blockchain technology for banks around the world. We have a new study that says more and more millennials are purchasing involved or plan to get involved in cryptocurrencies. There's a lot happening around the world. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and what is happening inside the blockchain space. And a part of the blockchain space, this is one part economy, one part technology, one part communications, one part doing your own research. There's a lot of parts involved, and it's really interesting because the backdrop of these cryptocurrencies and the backdrop of these non-fungible tokens and the backdrop of what's happening with this distributed ledger technology, with these decentralized assets and cryptocurrencies around the world, is that there's a lot of people involved. There's a lot of people that are purchasing them, that are holding on to them, that are hodling on to them. And it's in the backdrop of the US fiat money supply, of the world money supply, and the constant devaluation of the money in the face of how much money there is versus how much debt there is in the world versus how these countries such as America, United States of America, the country that we are citizens of partly, how are they going to pay back this debt? They're going to have to pay back this debt through either massive increases in taxation and or through inflation and printing more money, just increasing how much money is in the world, which, devalues that money through inflation. And, that's maybe fine in the old world, but in the new world that we are now all a part of, whether you know it or not, is that we have these cryptocurrencies which are increasing in value in face of that. So with that being said, let's take a peek at the news, take a look at what's happening in the world and how this relates to blockchain, and let's discuss. So first thing that we're going to go over, we just had this article get posted today from Bloomberg talking about the United States budget deficit, which has jumped to over $100 billion in the start of this fiscal year. And so just in case you don't know, October, which is just last month, marks the start of the United States fiscal year. And we are now in a record budget deficit in October. It's 60% increase from a year earlier. Spending grew twice as fast as the revenue. And this deficit widening from $63 billion the same time last month is just an incredible increase and is a true cause for concern. As this article goes on to say, a ballooning U.S. budget shortfall fueled by tax cuts, spending hikes, and an aging population is driving the Treasury Department to raise its long-term debt insurance. And this waning support for the United States government debt from the Fed, combined with President Trump's deficit-boosting tax cuts, right? All these tax cuts that created so much more deficit, so much more debt, all of this is weighing on the debt load that Trump has inherited from all of the previous presidents before him, including Barack Obama and Bush, and the TARP spending and all of this debt that is on the United States books. And with all of this debt, people are going to look at this. People are super concerned, and this is already being reflected in the economy. And so with all of this concern in the stock markets, with all of this concern with the United States and its continued growth, on one hand, the United States is more confident when you see the business optimism outlook. Businesses are allegedly more optimistic than they've ever been, which is just a huge cause for concern, because while things have never been better than they are now, when you're at the top of the mountain, there's typically not much more mountain to go up, right? Because you're at the top of it, And with markets, the markets go up, the markets go down. And a lot of people are just recommending that everyone be very careful, that they do their own research, and they pay very close attention to the debts, the deficits, the spending, and how the United States government, how the United States citizens are going to pay back this deficit of over $100 billion, not to mention the United States debt, which is near $22 trillion. And so what this goes on to relate to inside the Bitcoin world and the Bitcoin markets is the Bitcoin ETF. We are suspecting that the traditional financial institutions, that traders, investors, the banks and the whatnot, they're going to want a way, an easy way, vehicles to transition their wealth from certain assets that they're currently in, such as stocks and bonds and all sorts of derivative contracts, maybe gold, all sorts of mutual funds and ETFs, and vehicles like that, tools like that, financial instruments like that. And they really want to put that into crypto because right now the crypto market cap is overall so very, very small. There's not a lot of money overall in crypto. I think, what are we at, like $200 billion, $0.2 trillion versus all the money in the world in the stock market. They're seeing the opportunity. They don't want to miss out on those gains. And so before the proverbial crap hits the fan, right, before that proverbial, ceiling just blows out and the floor comes out from underneath the feet and things happen that people will look back and say, there's no way we could have predicted this. There's no way we could have seen that coming, which we've been talking about for the past, 1 to 2 years now. This Bitcoin ETF, if not the Van Eck ETF, one of them will get approved in time for the transition to happen, for the big money to on-ramp and off-ramp in. And this is in the United States, but we see signs of this all across the world. For example, we see the IMF, who's vowing to continue their devoted attention to blockchain, cryptocurrency, driving fintech, ongoing research, because they want to create anchor policies for all the future policies in blockchain technology, concerning blockchain technology, as they've recently said, November 12th. They were speaking on a panel with the Ripple CEO at the Singapore FinTech Festival 2018. They were talking about how they want to be in the center of these policies. They want to create the anchor understandings and systems of connection between these major financial institutions, between these new technologies, and this first part of FinTech acceptance. He's also including, as a part of Bitcoin and blockchain technology, distributed ledger technology, also including artificial intelligence, crypto assets, other technologies, but he is underscoring the continued research efforts regarding cryptocurrency and blockchain because they want to make this comprehensive framework of issues that countries need to think about. And they want to have this anchor policy there for all of the future policy that they then develop on top of this moving forward. And so it's not just the IMF, it's all across the world, from the United States to Russia. We have the Islamic Council approving a new Swiss Stablecoin. This is now going to be, with the blessing to be used across the Middle East, this Ethereum-based cryptocurrency called the X8C. 100 million coins have been created, more cannot be mined. And having these additional regional stable coins pop up all across the world to allow the fluidity between these regions and Bitcoin, these regions and the world, these regions and the internet, and this new global financial system, these coins are going to give billions of people permission to transact across blockchain and cryptocurrency. And bringing it back to America, we have this new study coming out that says the demand for crypto is rising from millennials. It's continuing to rise rapidly, that over 25% of millennials are already using or holding digital assets. Another 30% of the millennials that responded to this survey disclosed that they have an interest in investigating, studying cryptocurrencies, which is more than 55% of the millennials surveyed who are invested or are planning to invest in these cryptocurrencies. And as soon as Bitcoin is in the news again, as soon as the market pops just a little bit and everyone starts paying attention, there's going to be this rush. It's going to be a slow rush, and it's going to snowball very quickly. And we think people are going to lose their minds. They're going to lose their proverbial minds. And it's going to be very interesting to see what happens. That's what we can say. And it's going to be very interesting when we have millions of people all across the world who are all going to try to secure one whole Bitcoin or 0.1 Bitcoin. And they're going to recognize very quickly the value of cryptocurrencies, the value of digital assets, the value of these tokens, the value of blockchain technology, the value of decentralized distributed systems. And the reason is because only 14% of millennials believe that Wall Street is doing the right thing, right? So that's 86% of millennials. These aren't kids. We're talking about, what are we talking about when we say millennials? I think of, when I think of a millennial, I'm thinking about people between the ages of 20 and 30 years old, 20 and 35 years old. These are young adults. Millennials have kids. Millennials have to pay back student loans. Millennials have real world problems in a world that's not the same world that it was 50 years ago. And 86% of them do not believe Wall Street's doing the right thing. They, and probably those same 86 don't believe the Federal Reserve is doing the right thing. Those 86 probably don't believe that centralized organizations are doing the right thing. And we have a increasing percentage across demographics, across all age ranges, who are, questioning what's happening in the current world. They're questioning what's happening in the new world. They're starting to pay attention to Bitcoin. They're starting to pay attention to the United States budget deficit, the United States national debt. And we're paying attention too, and you're paying attention, and that's why we're checking this out and we're learning about this every day to recognize what's happening across the world, what's happening in the United States, what's happening with the IMF, what's happening across these major countries and regulators and financial institutions that are laying the groundwork so that they can make a cut on the on-ramping and off-ramping as people go in and out of Bitcoin, as people go in and out of the stock market, as people go in and out of every point of sale transaction. They still want to be in the middle. They still want to make a little bit of a cut. Even if everything gets way, way cheaper, way, way more affordable, way, way faster, they would still like to make, their fraction of a percent relative to, whatever the market rate is. And they are getting involved now because they believe that this is going to dramatically change our world. And I have to be honest with you, we also believe this is going to dramatically change our world. And if you think this is going to dramatically change our world as well, then let me know what you think in the comments box below. Like this video, subscribe, hit that bell icon notification. There's a whole laundry list of things to do. We really appreciate your support. We appreciate you being here because together we are minting coins.